6 cryptocurrency tips and 5 mistakes to avoid. Are you interested in cryptocurrency? Whether you are a beginner or an expert, avoiding losing money in cryptocurrency is a luxury that not everyone can afford. You have to be smart, but unfortunately, there are only a handful of investors who can do it. The only thing they have in common is mastering the famous tricks. With these tips, any investor can learn how to avoid common cryptocurrency mistakes and get the most out of their money. In this video, we will teach you, with the help of our animated explanations, the 6 cryptocurrency tricks and trading strategies. Then we will reveal the 5 common cryptocurrency mistakes and how to avoid them. I advise you to sit comfortably on your chair and watch this video till the end. I must first issue a disclaimer before I begin this section. This is not financial advice and I am not a financial consultant. This is my own opinion and not financial advice. Before investing in any of the various cryptocurrencies available, please do your research and due diligence. This video was created to help you easily understand the subject with our animated explanation. Now, let's get started. 1. Have a strategy for crypto trading. The first tip we discussed today is that of having a good trading strategy. It's not easy to separate genuine cryptocurrency recommendations from scams. There are plenty of sharks out there waiting to take your money. In 2020, according to the US Fraud Alert Service, reports of cryptocurrency investment scams jumped 57% year over year to 5,581, with investors losing a total of $118 million. So when you are faced with a lot of information about a cryptocurrency, take a step back from the hype. Try to take a critical look at the project. How many users does it have? What problems does it solve? Does it have industry connections? Avoid pieces that promise the earth and haven't delivered anything tangible. 2. Managing risk. Some people offering crypto trading advice might not have your best interests at heart. So don't get stung by making the same mistakes as others. Set limits on the amount you invest on particular digital currency, and don't be tempted to trade with more money than you can afford to lose. Cryptocurrency trading is a high-risk business, and more traders lose than not. Don't take your last $1,000 to invest in cryptocurrency just because you had a feeling. Even if your scenario seems very likely, you should only invest the amount you are used to investing. Do not go overboard. 3. Diversify your crypto portfolio. It's not worth it to have too much invested in one cryptocurrency. As with stocks, spread your money across different digital currencies. This means that you don't risk being overexposed if the value of one of them falls, especially as the market prices of these investments are very volatile. There are thousands to choose from, so do your research and invest in several cryptocurrencies at once. There are over 14,000 cryptocurrencies today, so you'll be spoiled for choice. 4. Be there for the long haul. Prices can rise and fall quite dramatically on a day-to-day basis, and novice traders are often fooled into panic when prices are low. Cryptocurrencies are not going away, and leaving your money in the market for many months or years could offer you the best rewards. You should know that the markets are very often manipulated by those who have the biggest money. Their goal is to get you out of the market and get your money back. So to be smarter, this is usually when you need to buy a lot more coins, and remember that this is only temporary and that prices may well go up sooner than you expect. We are not just asking you to jump into the market and buy coins blindly during the bear market. That's why you will need some trading knowledge. 5. Automated purchases. Just like with stocks and common stocks, this can help automate your crypto purchases to take advantage of average dollar costs. Most cryptocurrency exchanges, including Coinbase and Gemini, allow you to set up recurring purchases. This is where crypto investors ask the platform to buy a fixed amount of their favorite cryptocurrency each month on the desired day. For example, a $100 purchase of Bitcoin for every 27th of the month. This means they get a little less currency when prices are high and a little more when prices are low. This eliminates the stress of trying to time the market of buying a currency at what you think is the lowest price possible or selling at the highest possible price. This is something that even market professionals have trouble understanding. 6. Use trading robots. Trading bots can be useful in some circumstances, but they are not recommended for beginners looking for crypto investment advice. Often they are just scamming in disguise. If there was a real algorithm that timed your buying and selling transactions perfectly, everyone would use it. However, some bots have so far provided pretty good results. We won't reveal the names in this video because we believe, just like the promoters of these bots say, present results do not guarantee future results. So the best way to make money in cryptocurrencies is mostly to educate yourself about it, to make mistakes to learn better. So now that we've covered the tips, let's talk about the mistakes to avoid when investing in cryptocurrencies. In the world of cryptocurrencies and trading, it is common to see new entrants make avoidable mistakes and lose their initial investment in the process. Often these mistakes are simply the results of a lack of insight into a new market. The purpose of this section is to give you some tips to avoid the most common mistakes. 1. Think about the security of your wallet. This is certainly one of the most important aspects and the cause of many losses. In the digital world, we are never too protected from cyber attacks and never completely safe from a hack. On the other hand, some very simple methods can be used to protect your funds. It seems obvious, but having a complex 16-character password with upper and lowercase and specialized characters is a must. All too often, novices use simple passwords, making it easy for anyone to steal your account. It is also wise to change your password regularly. To take it a step further, it is highly recommended to add dual authentication to your account. You can Google authenticators on your smartphone for dual authentication, also called TFA. 2. Portfolio management. Track your investment. This point too seems obvious when presented, yet it is common to see investors putting money into cryptocurrencies, buying Bitcoin for example, and then completely losing interest in it for a long period. Of course, it's not necessary to track daily, but when investing, it's important to keep up to date with developments on a fairly regular basis. To manage the monitoring of your investment, we advise you to establish a strategy and to set your objectives before the investment. In this way, you will have a more precise vision of what to expect from this investment. Having a precise goal and especially limits can help you manage your investment and avoid losing money. For example, determine the price at which you want to sell. In addition, establish a good track record before the investment allows you to make more rational decisions. It is rarely a good idea to make decisions in the heat of the moment, rushing in under market movements. Generally, this is where mistakes are made. 3. You must know that opportunity equals risk. The cryptocurrency market is still young. There are a lot of interesting investment opportunities in this market. Nevertheless, don't be mistaken. In the investment world, opportunity systematically rhymes with risk. Indeed, there is no investment offering strong returns with zero risk. Generally speaking, the more risk you take, the more you can earn. But this is quite logical because the percentage of chance of losing is greater. 4. Don't be naive. Invest a few dollars, a few $100, and you will become a millionaire heading to California in your new Ferrari. Stop! Don't expect to be a millionaire without taking any risk in investing a few dollars. There's no such thing. The world of cryptocurrencies is booming, and unfortunately, a lot of imposters are taking advantage of that to scam new entrants. As soon as the project seems too good to be true and that you are sold wonders, it is better to pass its way. A serious person will always expose you to the risks related to the investment and will never speak to you about guaranteed profits. 5. Avoid Ponzi pyramids. Ponzi pyramid is one of the most used schemes in crypto scams. It is a mechanism based on an affiliated system where the funds brought in by new users are used to pay back commissions paid by previous users. The term network marketing or MLM can also be used. Beware, not all forms of MLM are scams. Simply, the MLM crypto mix rarely results in reliable projects worth trusting. The pyramid collapses when there are not enough new members to pay the old ones. Let's imagine that to be paid, each person must invite 6 new users. In this case, at the end of the 13th round of recruitment, the number of people necessary for a good functioning of the pyramid will be higher than the population of the Earth. The system is all the unhealthier because most of the time you get your loved ones involved in a very bad adventure. And when you realize it, the only way to get out of it and recover part of your stake is to make other people dive in your place. To avoid falling into the crack of this type of scheme, all you need to do is do a little research. Doing some research before investing is important. If you have any doubts, it is usually a bad sign. You will have understood only invest in projects that inspire you. If you want to make maximum profit, we recommend you to invest in new projects. Why not metaverse cryptocurrencies, but also automatic monthly investment? Don't worry, because we have already made a video on top 5 metaverse tokens to follow. In this video, we not only present our list of top 5 metaverse tokens, but also show you how to recognize a good project. We recommend that you watch it by simply clicking on the thumbnail that appears on the screen at the end of this video.